So in Chapter 6, we are looking at deductions, and this is always good unless you have to tell your client that no, it is not deductible when they expect that it is. And so you have to understand, and you have to be looking for deductions as well. You know, when you do your questionnaire for your clients, there'll be lots of questions, and we always review those. And if it's something like, for example, it'll say, do you own your home? Yes. Did you have any mortgage interest? No. You always follow up with, do you make payments? Because sometimes people just don't read the question. Sometimes they don't understand. So we're looking for those common deductions, asking lots of questions so we can look for other deductions as well. So I'm going to go over a couple of the problems at the end of the chapter, just again to go over the terminology. So in number 51, we have Evan, who graduated from college, and he is getting paid a salary of $72,300, and he received $700 in hourly pay. And by now you have determined or now know that I'm recording video lectures this summer at home, and I have 5 dogs, 3 in the house, and so when you hear them barking, I apologize. They are protecting me, or at least they think they are. Okay, so back to the video. He got $700 in hourly pay from a part-time job. And then he has expenses. So he had cost of moving, $1,200. He had interest paid on student loans. And oftentimes we will ask these questions, and it may not be deductible depending on the situation, but we ask the questions. And so again, you've got to be really familiar with the law so that you can explain it to your clients. Contribution to State University Delivery Man Program. So he has a contribution, $1,300. And it asks us to evaluate Evan's AGI and taxable income if he files single. Assume that interest payments were initially required on Evan's student loans this year. So the way that we would calculate this is we would look at his salary. So we're going to look at different, I'm trying to just figure out the best way to document this. So his salary is definitely going to be part of that. His hourly pay as well, $700. And so we have what's called a modified AGI, and we modify it for student interest. So you might want to go back in the chapter and look at that and see what we mean by modified. But for certain deductions, we have to take AGI, adjusted gross income, and modify it a certain way to see if we can deduct that or not. And so we modified it to determine, and he does get the student loan interest deduction. However, that is limited to $2,000. Okay, and then we have his AGI, which is $71,000. He has a standard deduction. He doesn't have enough to take the itemized deduction, so he gets the standard deduction of $12,200, which gives him taxable income of $71,000 minus $12,200, or $58,800. Now, the cost of moving is not deductible. Used to be. And again, a lot of people think it is, so we have to explain that. But the moving expenses are not deductible. The student loan interest was limited, so we gave him what we could there. Employee expenses, this delivery uniform is no longer deductible, so cannot take that. And then his contribution, see if it tells us anything about that other than it's a contribution. I mean, he doesn't have enough in itemized deductions to take that. Had he itemized, it would have been tax deductible. So oftentimes nonprofits will say, hey, if you'll donate to us, it'll be a tax write-off for you. And that's true if they itemize. Obviously, his standard deduction of $12,200 was much higher than his contribution of $1,300. We don't really know about any other itemized deductions. We might ask. But we can get that information and explain that to him. Um, the limit on the student loan interest is calculated based on that modified AGI, and I'm not going to take the time to do that. You can go back in the chapter and practice calculating that, but the answer, what he can deduct, is $2,000 of the $2,800. And remember, you've got to work from that modified AGI number in order to calculate that. So I'm going to go ahead and flip on over. The next problem is actually one of your tax return problems. And so you can begin looking at that and gathering information to help you work on that. But I'm going to look over at problem number 53. This is Jeremy and Alyssa Johnson. They've been married for 5 years and do not have children. Jeremy has a child from a prior marriage. He's self-employed. Alyssa worked as an employee for 2 months. She is now working for a new employer. And they had $255,000 of gross income, and it's asking us to calculate their AGI. So we're going to look at some for AGI expenses. So the first one says that expenses associated with Jeremy's store include $40,000 in salary and employment taxes to employees, $45,000 of supplies, and $18,000 in rent and other administrative expenses. And so we do subtract that. The gross income from his store, we have to make the assumption, is included in that $255,000. And so we have a deduction from that, and it's called ordinary and necessary business expenses. And I mentioned this, I think, in the introductory video. When a client says, can I deduct that on my business, that's what you have to ask them. Is it ordinary? Is it necessary? And we have determined these are, so we can deduct that $103,000, which is all of those added together. The next one says that as a salesperson, Alyssa incurred $2,000 in travel expenses related to her employment that were not reimbursed. And unfortunately, unreimbursed employee business expenses are not deductible. And that's unfortunate, but they're not. And so the answer to that is 0. The next one says the Johnsons own a piece of raw land held as an investment. They paid $500 of real property taxes on the property, and they incurred $200 of expenses and travel costs to see the property and to evaluate other similar potential investment opportunities. So the real estate and investment expenses, taxes are deductible from AGI, but not for AGI, and investment expenses are not deductible. So the real estate investment, tax and investment, so to calculate for AGI is 0, but keep in mind that real estate tax can be an itemized deduction if they have enough itemized over the standard. Investment is not deductible. D, the Johnsons own a rental home. They incurred $8,500 of expenses associated with this property, and yes, they do get to deduct. That would actually be on a Schedule E that we'll talk about later, but they do get to deduct those expenses from the income they earned from that rental property. E says Jeremy paid $4,500 for health insurance for himself. Alyssa was covered by health plans provided by her employer, but Jeremy's not eligible for the plan. So you have to know that. If one of the spouses is self-employed and one is an employee, you have to know if the self-employed individual is eligible to be covered under the employee's health insurance. That is a key piece of information to determine whether or not the self-employed individual can deduct their health insurance. And because he was not eligible, he is able to deduct that from his gross income. So that $4,500 can be deducted. The next one, F, says that Jeremy paid $2,500 in self-employment taxes. And so the IRS allows 1/2 of self-employment tax to be deducted from your gross income. So he can deduct $1,250 there. G says that Jeremy paid $5,000 in alimony and $3,000 in child support. The divorce was executed in 2010. Again, that's very important to know because the law changed for divorce decrees that were final up to a certain date, and so, or after a certain date. And so the alimony, because it was back in 2010, that is deductible. Child support is not. That is not deductible. And then finally, let's see, the Johnsons donated $2,000 to their favorite charity. That is deductible from AGI, but not for AGI. They can take that if they itemize. So all of that together will give them their AGI, and if I did this right, it would be the gross income minus the sum of all of these deductions, or $132,750. So again, you just have to analyze each one and look at the tax law and determine. Also, you always want to make sure that I totally messed that up. Charitable contribution. There we go. You always want to make sure that you're asking them those questions. And when you say, no, you can't deduct that here, but you can if they itemize. So that's a from AGI, but just not a for AGI. These are all for AGI. Okay, it's a great chapter. Lots of things to learn there. Just let me know if you have any questions. Thank you.